Let's talk swing trading, shall we? Every trader loves to, think about the concept of maybe capturing 1, 2, 3-day moves. How about 3-week or even 3-month moves? In this video, guys, we're going to talk a little bit about some of the most common swing trading setups that we like to look at over time, obviously, and how we can maybe apply some of those even on an intraday basis and capture those 2 to 3% moves that we get even in the overnight period, going from one day to another. Let's jump right into things here, guys. Let's talk about the best swing trading strategies.
All right. Arun,
Yep.
we love trading and we love swing trades.
Yep.
So I think this is right up our alley. So let's get ready to rock and roll here and talk about swing trades and what we're looking for. I mean, to me, obviously, I think you need a catalyst. And I think one of the very first things that you're looking for is, is there reason for this name to move? Is there a reason for this sector to go? Why are we looking at this? If you're going to look at a stock that really isn't moving, let's pick the oil sector. If there's not much happening there, then why would you take a swing trade on an XOM or a Chevron or something like that? If there's really no EV talk, then stay away from the EV names, right? We've just had a great opportunity the last little couple months or pretty much this whole year to swing trade every single sector. Things are hot right now, and I think there's no better time to look at some of these plays. The only advice that I have is you gotta, if we've determined that, hey, we can almost swing anything right now, there's lots of stuff moving, well, then I'm gonna look for maybe more recent news, because if you look at a chart over the last 3 or 4 months, like Brendan was saying, there's gonna be tons of opportunities, upside and downside on a lot of names. So I'm actually gonna pick Twitter today. We have right now today, news with Jack Dorsey, news. The stock is moving around now. You get news with the new variants. We get some nice movement in the NASDAQ right now, tipping down a little bit. And now Twitter, NASDAQ today up 2%. Monstrous day on Friday to the negative side. But look at this. If you're going to swing trade something, and we've been talking about this, you got to do it near key levels. I mean, you don't just take a random position right here at 47 and change. You look back and you say, hey, is there a bottom here that we can maybe bounce off of that we've had success bouncing before? I mean, the last time we were down to 46, we bounced, got to 47.50. That's not bad for a swing trade. It happens again there. Goes right back to 47.50. Then you get the Jack Dorsey news showing us that there is lots of liquidity in Twitter. So this is a name that I like. So go back a couple days, find some key spots. But again, it's identifying your time frame. So I think this is a good one for short. But then look at this. As we go on this is not a daily chart. As we go here on a daily chart for Twitter, you'll also see the same thing. We could go all the way back to January of this year. So you're going back 10, 11, 12 months and finding the same kind of support at this 44, 45. So whether or not you want a small week to 2-week kind of time frame to swing, I think you're at those levels, and we identified that on a 20 period. But if you're saying, you know what, I want to hold something into the new year, I want to buy something that, or even sell something that are at some key levels, I think you got to go back and you find dramatic moves, bouncing off some support. And right now you have that opportunity in Twitter. Going back here, 45, 46 bucks. This gives you a great opportunity for the upside. And then if it breaks, boom, you're down here to 40 again. So there's an opportunity here to kind of play both sides on this swing trade. You're looking for levels with catalysts. And I think we have both of that with Twitter.
Yeah, and something I do on the show when I look at charts, I always do something like this, where I pull up a large time frame relative to, for us, 30-minute time frame, and then I'll zoom it out and see what the landscape looks like, right? So this is what I'm doing on Microsoft. I'm zooming it out, seeing what the levels look like. Now, if I wanted to swing trade, all I have to do is pretty much do the same thing, just change the time frame from 30 minutes to say something like a daily. And let's just, here, I'm pulling out, this is our e-signal chart, by the way, and I'm just pulling this back, and this is our Apple daily chart. What am I seeing? If I want to get a swing trade on, I'm going to do the exact same thing I do on an intraday basis, just with a different time frame. So I'm looking for volume. Where does the market really want to hesitate? Where is it spending a lot of time in volume, or where does it not want to be? Let's take a quick look at Apple. Apple clearly hesitates around this 140 mark, right? We go back to January of this year, it hesitates around 140. Even September of 2020 hesitates close to 140. So when we get through 140 and we come back down in October, around there's going to be some volume, because we've done it before multiple times, that there's going to be hesitation. So as soon as you get your trigger entry, whichever way you decide to get in, I like to identify zones, and then I'll figure out how I want to get in. And for me, once it crossed 145, I think that level is confirmed. I'm going to step into the long. And then you just manage the trade as if you would manage any other trade. And you can do this same logic to multiple stocks. Now, somebody said in the chat, Lucid was a great example. I looked at the Lucid chart. Absolutely, this is a different style of entry. This is like a breakout. We do intraday breakouts here, but look at the daily breakout. Once it crossed 34, you have a ton of support. What used to be previous resistance is now going to act as support, and you can go for the long. You just have to hold it longer. It's not going to be a quick daily trade. It's not going to take you a few minutes or a few hours, but this is going to take a while. But as a swing trade, look at that. You go long 34, as high as 56 and change. Depending on how you manage it, you are capturing a large chunk of that move. So all you have to essentially do, at least not all strategies can be applied this way. Obviously, momentum strategies are different, but these breakout style, resistance, support level entry points, those kind of strategies will work well on the intraday basis and on the swing basis. So that's how I would go for trades on the swing side of things.
Fantastic information. To sum up just quickly, guys, a catalyst, a reason why the stock is moving. We get out to the higher time frame. We find those significant inflection points, which not only gives you entries, but it defines your risk and helps you control the downside. You know where you are wrong and can get out if we do break those levels. Great points, great way to approach swing trading, guys.